Let's kick it off with the big story of the day, starring a gambler, a golfer, and a billionaire investor.
Reports of an insider trading investigation involving Carl Icahn, the golfer Phil Mickelson, and also well-known sports gambler Billy Walters. Both the Wall Street Journal and the New York Times reported this before and during the weekend. The Journal says investigators are looking into whether Icahn told Walters about investments he was going to make in his fund, and that Walters may have then told Mickelson. The Times says investigators are looking specifically into Clorox trades because Icahn had tried a takeover, which temporarily boosted the price of that stock.
Yes, remember that? Icahn didn't actually go through with it. Again, this was back in 2011. He spoke with our Trish Regan over the weekend via telephone, and here's what he said, quote, "We do not know of any investigation. We believe that making inflammatory and speculative statements is completely irresponsible on the part of the Wall Street Journal." Now, while I have obviously heard of Phil Mickelson, I've never actually spoken to him or met him.
You know, John Coffey isn't going to say this, but when I came into the business, I was told by smart lawyers at Davis Polk and other places that the way to stay out of any problems, as Trish was referring to before, is if you have some information that other people, if they had it, would change the price of the stock for them. If you have it and you act on it and they sell a stock to you or buy a stock from you and you have an advantage, that's wrong and you will be in trouble. Well, it's no longer that case. It's much different than that. You have all kinds of rules and regulations which make it almost impossible for the people with the advantage, if they want to use it, to get caught.
Understand there is a very high burden of proof to convict someone of insider trading. And the laws, we should point out, have evolved since the first SEC case back in 1961. So, tell you what, two prominent attorneys that are just going to explain this thing for us.
There are a number of elements that are required to be proven by the government if they're going to bring charges for insider trading. You can trade on inside information and not violate the law. How? Because you first have to know that, one, it's material, non-public, that's okay. But if you don't know that a duty has been breached, and you don't know whether the tipper has received a benefit for giving that information to the tippee, then if you simply get a tip, and the tip is you ought to buy this stock, they're going to announce earnings or there's going to be a tender offer, you should be okay under the law, because rumors and tips and information
they're out there all the time.
They're out there all the time. So the law has expanded to the point where you've got to at least prove other elements before one can be charged with insider trading.
Sean, I see you nodding your head on some of this.
Yeah, I mean, I think that what's really interesting about this story is the John Grisham element of it. You have a famous golfer, you have a famous Las Vegas gambler, and you have a famous corporate raider. You could almost see Grisham warming up the computer. Right. It's important to note that there's no allegations of wrongdoing here. I think it's very curious that these trades, because it's not just Clorox, there's apparently some trading in another company, Dean Foods.
Dean Foods, yeah.
Took place about 3 years ago. And the trading would have been known at about the time. So I guess one question I'd have is, why has it taken so long? And if it was taking...
Why would a case take so long?
Well, could be an indication of a weak case. Priorities. Obviously, the U.S. Attorney in the Southern District of New York has been quite busy on other matters. But if I'm him, I'm a little upset today because I want to know who leaked this.
The issue of the leak, arguably more egregious part of the story.
It's unlikely that someone associated with Icahn, who denies he even knew about it, leaked it. See no upside for Walters or Mickelson to have leaked it. So the suspects would be someone associated with the government. And if you're trying to put together a case, and as a former federal prosecutor, both of us know this, you don't want it out there if you're trying to perhaps gather evidence covertly or wiretaps. So I think there's a lot about this that's funny.
Yeah, and then there's the big question, motive, right? Why would someone want to put this into the public domain? I mean, what do you actually accomplish? Market makers Eric Schatzker and Stephanie Rule played a little detective on this theory.
Is it possible, I'm just going to throw a theory at you, is it possible that there are people in regulation or law enforcement who believe that the kinds of conversations that may have taken place between Icahn and others, and have taken place between Bill Ackman, say, and the folks at Valiant, are improper or should be improper, and thus, by throwing such high-profile names into newspaper headlines, it raises the level of attention and forces regulators to take action in some kind of rule writing?
Yeah. Look, and I worked with Tom for a number of years. No one I know at the SEC or the Department of Justice would ever take that approach or that tack. I don't know where the leak is coming from, but to be frank, I'd be shocked and horrified if that was part of why this leak came out from a regulator, and that was the motivation. Look, in fact, in most instances, regulators have every incentive to keep this type of information close. For, among other reasons, many of the insider trading cases that have gotten some note in the last couple of years were fostered by cooperation and the use of wiretaps, all of which require covert investigation. Right. So there are lots of advantages for regulators to keep this information.
So is it possible, then, that the leak was designed to make such activities impossible, so that there's no way to go and get a wiretap authorization?
That is certainly one possibility. And I think, on the contrary, I think when you think about what the regulators and the government is doing now, I think they're monitoring very closely conversations that are happening among the participants in the aftermath of the shaking out to see if there's any culpable conversations occurring.
Yeah, we may never know who actually leaked this thing. But it doesn't matter, really. Former federal prosecutor Doug Burns says this is a weak case.
First of all, this case is a double whammy of weakness, because when you get past the fact that there was a leak, the reality is any securities law expert or professor is going to tell you the following. You ready? First of all, material non-public information is important information. You know, earnings, activation statistics of phones, and it's not available to the average investor. Fine. Here, Carl Icahn took a 9% stake in Clorox and may have told this guy Walters, I think his name is, about that. It's not clear at all that that's a breach of a fiduciary duty, which would lead to insider trading liability. You follow me? In other words, if I walk down the street, and I think I gave you this example one other time, and a memorandum blows out of a law office window about a secret deal, and I trade and make money, that's not insider trading, because nobody breached any duty.